Welcome to the second episode of What the Heck Happened Last Week in Real Estate, where we examine the top events and stories that happened in the real estate world. So let's jump right in and start with the biggest news of all.
Tonight, the Federal Reserve announcing the largest interest rate hike in nearly 3 decades, raising rates by 0.75%, trying to cool off an overheating economy and bring down record-high inflation.
The Federal Reserve announced its sixth rate hike of the year, just as 30-year mortgage rates recently rose above 7%. Rates are more than double now what they were when the year started, making this the largest short-term rate hike in history. And that's had an impact in the housing market, and a major one at that. For reference, this rate hike is so dramatic, it means that if your max budget for a home in January was $400,000, now it's only $251,000. If that sounds crazy, just realize that when your rates go up just 1%, your budget goes down 11%. So that's right, the monthly payment for a $400,000 home in January is the same as a $250,000 home today. You have to imagine this has caused a ton of buyers to stop searching for homes. Unfortunately, they're not finding any refuge in rent prices because those are also at record highs. With these rate hikes, it's not just buyers who are putting their plans on hold. Sellers are avoiding selling now as well, which we can see because inventory levels are still at historic lows. In fact, they're still 40% lower than where they were pre-pandemic. The assumption is that they're afraid of losing their current low mortgage payment, especially if they refinanced, in exchange for one that's much higher or the same for a lot less house. Despite the doom and gloom in headlines like these, other than some overinflated metro areas in the country, the real estate market seems to be at a standstill. Prices are forecasted to continue coming down through winter and spring, but that's mostly just rebounding from the insane 13% increase we had over the past year, coming down a little bit. Ultimately, a crash doesn't appear to be happening because supply and demand do not call for it. Despite affordability issues for buyers, that seems to be the forecast. Next up, signs point to the U.S. economy dipping into a recession at the beginning of 2023, which could provide some relief to the housing market. If prices continue to float down over the next few months and we do go deeper into a recession, this almost always causes interest rates to drop. That's potentially good news for buyers next year, and honestly, it's good news for most sellers too. Again, prices went up 13% last year and are only supposed to fall that amount or less, meaning that in a short period of time, we could actually see supply and demand balance out and the real estate market see competition levels similar to what it was before the pandemic. So I think by now we've established that homes and rents are expensive. So this does beg the question, how can anyone functioning on a smaller budget keep a roof over their head? Cincinnati has recently done something about this to try and help its citizens fight the high rent and high home prices. The Port, which is the nickname for the Port of Cincinnati Developmental Authority, took a unique approach to helping keep homes affordable. This past year, they competed in bidding wars against investment companies and beat them, adding millions of dollars of homes to their government portfolio. They're now fixing these homes up and are planning to rent them out to locals at affordable rent prices. Then, the goal would be to eventually sell them to accommodate any financial losses. It's an ambitious project to be sure, but one that has caught national attention. It's definitely an interesting method to combat affordability and hopefully one that allows locals to stay comfortable financially. Now, the reality for most renters in this country is one that involves tough decisions, though. Apartment vacancies are rising amid a 25% increase in rents over the last 2 years, so a lot of renters are choosing to move in with family or find roommates. This is especially true as evictions rise due to moratoriums ending. This has caused rental prices to finally begin falling, although gradually. As with home prices, there's a light at the end of the tunnel for rent prices as well. So, home prices are high and coming down. Rent prices are high and coming down, but they're only expected to fall in an amount that's less or equal to the gains they earned in just the past year, depending on your metro area. Most homeowners are sitting on a huge cushion of equity as prices have been rising over the past 10 years. In fact, average prices are more than 60% higher than where they were in 2006, which was the last peak we had before prices dropped. But unlike then, we don't have subprime mortgages casting this huge shadow over the housing market. Back then, we had a supply issue. Today, we have a demand issue. Builders pulled back when COVID happened because they were afraid of what happened in 2008. when in fact, the opposite happened. We actually had a housing boom driven by that inventory pullback, record low mortgage rates, a surplus of cash pumped into people's pockets, and this new work from home movement causing a want for larger homes. So while the Fed raises rates at an historic pace with the intention to combat the inflation problem they help create, the supply and demand dynamics of the housing market, along with the strong job market, which that report just came out as well, means that we're probably looking at a small price correction in the grand scheme of things instead of a crash you're probably seeing in catchy headlines or in YouTube videos. So this means buying and selling right now is a decision that you need to make that's based on you and your circumstances. There is no flat, it's a good time or a bad time to buy right now. But once rates likely come back down during the projected 2023 recession, buyers and sellers will both be in a position to basically pick up where they left off a year ago. And overall, that sounds like great news to me. So that's what the heck happened in real estate last week. I'll see you guys next week. Bye.